Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 15th of March. I'm Phil Carroll.
Kevin Hornsby.
And I'm Charles Archer.
And it's Mother's Day. Has everybody spoken to their mum or seeing them today, given them some love?
Yeah.
Glad you just reminded me, because I didn't know it was Mother's Day.
Well, you've got a few days, little heads up there, Kev. So
I don't know, to send flowers. Look, just have them scheduled. It's the same time every year, right? Just have the flowers scheduled. It's not complex.
We have a different Mother's Day here in Egypt. It's not the same day. That's why.
I do know. I quite like the game mode because like Mother's Day is super important and critical, but Father's Day is always seen as this kind of made-up holiday that no one cares about, which I think is probably kind of fair because the mothers go through the suffering to get the children into the world. But at the same time, it'd be nice to get a steak on Father's Day. Yeah, but
still both created by Hallmark at the end of the day.
Yeah,
you're thinking of a different day there, aren't you, Charles? Steak, is it Steak and BJ Day or something?
It is indeed. Are we allowed to talk about that on the roast? But yeah, that's
food oriented, isn't it?
Well, I kind of. But then on the other hand, I think that there are people in the world that only get steak and BJ's on one day a year and look forward to it. It seems a bit of a sad way.
I like the diversity meat. You've got beef and pork as well in that one.
Oh, that is beautiful. Yeah. So I'm going to go throw up now, and let's restart the podcast.
Yeah, okay. Well, let's move on to the big news story of the week. It is the dominant global story this week has been escalating tensions involving Iran and attacks on shipping around the Strait of Hormuz, the world's most critical energy choke point. Brent crude briefly surged towards $120 a barrel as markets priced in the risk of disruption to a route that carries around 20 to 21 million barrels of oil per day, roughly 20% of global supply, and about a fifth of the world's LNG trade, despite the strait being only 21 miles wide at its narrowest point. The biggest exposure isn't Europe or the US, but Asia, with China, India, Japan, and South Korea receiving nearly 70% of the oil flowing through Hormuz, meaning any sustained disruption could rapidly hit fuel prices, shipping costs, and fertilizer supply. Beyond energy, there are knock-on risks to global supply chains, including Taiwan's semiconductor industry, which relies heavily on imported LNG and oil for power, meaning prolonged disruption in the Gulf could ripple through everything from AI chips and smartphones to cars and defense systems. So, Charles, you wrote a good article on this, the whole kind of fertilizer, the supply, not just bananas, as we've said in the past, but just talk us through what this means for the knock-on effect.
Well, the thing is, everyone points at the oil price, right? And the oil price is rising. And if you take a quarter of the oil and LNG out of the system, then obviously that's going to have huge inflationary effects. But by and large, those are temporary because the strait will eventually reopen. And then the oil and gas will reflow. And yes, there'll be a few months where there'll be higher prices. Your bigger issue is probably the fertilizer because, you're coming from a farming background, those input costs, you either don't plant what you're going to plant this year, or if you do, you have to charge more for what you sell in the end, or you don't make a profit. So food inflation, I think is the bigger issue. And then helium, as I said, a third of the helium supply globally has gone offline now, which, MRI machines, semiconductor manufacturing. But then also, as you say, gas, they're talking about gas rationing potentially in Taiwan. And then sulfuric acid, copper, aluminium, nickel mining, all that is going to be massively impacted. So, you might find that prices of those commodities rise, then that feeds into inflation as well. I think there's two kind of bigger stories here, though, beyond all of that. Because assuming the strait reopens, eventually it will just be a temporary blip, right? And the strait will reopen at some point, whether by force or peace. But it's that these massive black swans that hang over the global economy that we all know will eventually come to bear do eventually happen, and this is one of them. And the other big one that that the whole world knows it as well. The whole world knows that Hormuz was a choke point and a risk factor, and it's been on and off violently for years. I don't think anyone thought that it would actually be closed. No. And now analysts, who have seen it closed, are now trying to predict, what was going to happen next, but they didn't think that would happen in the first place. It's Taiwan, right? That's the next big thing. China has made it very clear they're going to take Taiwan back. So, if Taiwan goes offline, then semiconductor manufacturing goes offline, which has been threatened to by a lack of gas and helium already. What happens to the Magnificent Seven in the US tech stocks? The bottom falls out of them.
Absolutely.
So, that's the other thing to keep an eye on is Taiwan.
Yeah, and I think we talked about this last week, Kev, is, Trump has said this week, he's told media that the conflict could end very soon because there's practically nothing left for the US to target militarily in Iran. What do we make of that? I mean, do we see an end in sight? Do we think, I mean, obviously, one of the things I think you said, Kev, is that with the rise in the cost of living, inflation, obviously fuel prices in the US, they've seen petrol prices increase to something like 25% in the last week, which is going to absolutely, it's almost a right to cheap fuel over there. When people start struggling, it's almost puts pressure on from a political standpoint to stop the war. Do you think that's going to happen?
Hard to know, because in a time of social media and that we have instant news, I believe we're being misled in every single way possible over the last week to 10 days. Both what's happening in Israel, what's happening in Iran, what is happening in the Middle East in general. So I think it's very hard to predict. We don't know what's going to happen because, Mr. Trump's coming out and saying the war's nearly over. I don't believe him. The Iranians are coming out and saying we can make this last for as long as we want. I don't believe them. The Israelis are coming out and basically saying there isn't any damage. Don't believe them.
Yeah.
And they're in attacking Lebanon. I know because I've got friends in Lebanon, and they're basically destroying the living daylights out of Lebanon. So what do we believe? What do we believe? The issue with the economics of the whole thing is that Asia is going to be affected pretty drastically if we don't sort the oil side of things out, along with sulfur and all the other things that get involved. And I suppose at the end of it, you got to look at the human situation as well. Lots of people are dying.
Yeah. Yeah, we mustn't forget that. Charles, is $200 barrel, so $200 oil a real possibility here, or?
Well, the thing is, obviously, it is a possibility. If the Strait stays closed, then yes, there is a possibility. But I think it's worth thinking about, what does $200 oil look like? It means every plane in the world is grounded because they can't, you can't charge the prices that you would need to. It means, for example, like we're flying out to Disneyland to Paris in the summer. Yeah, and I think we're flying with EasyJet from Bristol. So
sorry to hear that. I'm sorry to hear that, mate.
No. Well, nothing too glamorous, but children Disneyland. Anyway, but the point is, okay, you can say, oh well, EasyJet's hedged their production, right? So they're fine, but they need to physically have the jet fuel to put in the damn plane to fly to Paris.
Yeah.
Doesn't mean that you know what I mean? Like, yeah. But it's the offshoots of it. Obviously, it's the inflation, which would just be horrendous. It's does the US then turn on the money taps, but would it actually do anything because you don't physically have the oil in the first place? It's but it's also the downstream effects of, energy feeds into everything, but the petrochemicals as well, like do plastic manufacturing, all plastics, do they go offline because you can't generate a profit, But I think probably the biggest problem is that once you stop producing oil or you start shuttering liquefied natural gas plants, as they have done in Qatar, once the conflict is over, you've got to spend a couple of months demining the strait, assuming they are mining it as is being allegedly reported. But then you also have to get the oil and gas production back online. That doesn't take no time either. So even if you signed a peace treaty now and everything was fine and hunky-dory, which I think is very unlikely, you still have months of disruption. $200 oil, I think is really unlikely. But I think the problem is, when we talk about like junior resource stocks, right, like a pure play explorer or like a biotech company, and you go out and you drill a few holes, and you're either going to hit something or you're not. Yeah, but like a broker note will say, the share price target is, this based on the chances of success. And the same with the biotechs, either the trials succeed and then the share price goes to the moon, or they don't and it fails. And it's the same, it feels to me, with the oil price. Either the strait reopens, in which case everything will, it'll be very volatile, but it'll go back to normal in a few months, or it stays closed for an extended period of time, in which case, the global economy, the bottom falls out. But it's very hard. As Kevin said, it's very hard to know what's happening on the ground, so we'll see.
Okay, well, that segues nicely onto our first guest this week. We're joined by Paul Elliott, Chief Executive Officer of Active Energy Group, the renewable energy and digital infrastructure company building scalable energy-connected infrastructure platforms in key global markets, particularly across the Gulf region, where demand for high-performance computing and digital hosting capacity continues to grow. Welcome back to the podcast, Paul.
Hello, how are you?
I'm very good. You?
Yeah, not bad. Thank you very much.
Excellent. Yeah. So obviously we saw the news that the company has just provided an update on the development of its first 8 megawatt UAE energy and digital infrastructure facility, with site handover now expected ahead of energization by the end of April, following some modest timeline adjustments due to permitting processes, Ramadan and regional logistics. Alongside that, Active Energy has signed head of terms to acquire the Gumud grid connection asset in Abu Dhabi, which provides a live 3.5 MVA grid connection with roughly 3 megawatts of available load, giving the company another energized site it can rapidly deploy modular digital infrastructure onto as it builds out its regional platform. So, Paul, firstly, can you just walk us through the progress at the UAE site and what investors should expect once the facility is energized and fully operational?
Yeah, it was quite frustrating. I was out there just the week before the war broke out. Everything was looking positive. It was great. There were talks of a very slight delay due to Ramadan, but it was just literally box ticking, etc. And then a week moved on, and then all of a sudden everyone's working from home. There's no one in government offices, and basically we've been informed that things are going to probably be more likely mid to end of April. So we've gone for end of April, which is very disappointing for us, and as it is for the shareholders, etc., who are waiting for big things. But on the positive side of that, number one, it's not going to affect anything regarding clients going into the site. It doesn't affect our revenue. So everything else is still exactly the same as what we first announced.
Yeah. And how are things over there? Obviously, as you say, we've seen a few drones hitting mainly city centre, obviously near the airport. But as you say, people are working from home, government offices shut. But what is the general feeling over there from the people?
But you know what? The people that we're speaking to on a daily basis that we're working with out there, they're saying, every 3 to 4 hours, you're getting a pop in the air, etc. You might see the odd drone. We're talking about, thousands of feet up, but they're just abiding by the rules. They're working from home, working in low level buildings. If you get the alert, go down to the basement, etc. Everyone's doing that, and they're carrying on with pretty much normal as they can. The only issues you've got there are the British, who seem to be there, and they're spending their times in beach clubs complaining and filming drones going overhead and saying how bad it is. And then obviously the roads are very quiet, and then come 4 or 5 o'clock in the evening, again, the Brits, your influencers and that, renting supercars and racing around the streets. But, that's the British mentality compared to the rest of the nations that are working out there and abiding by the rules. So, which luckily we're dealing with the people that abide by the rules. And, they're saying, you've got to be careful. But other than that, they're trying to get on with their lives as much as normal. And the important thing is for us, our site and the new one, etc., they're all in, pretty desolate areas compared to they're not in built up areas. They're not in places that are going to be hit by drones, etc. So we're confident we're okay.
Yeah, let's just hope it's not a long drawn out kind of protracted affair and everything can get back to a bit of normality. But let's look at the proposed Gumud acquisition, as I mentioned there at the opener. Just how important is securing these energized grid connections to the wider strategy of scaling your infrastructure platform across the region?
And I think it's important first to say that we've got lots of plates spinning at the moment. We've got deals that we're working on which are looking at a larger picture, but everyone wants to see a larger amount of power. Obviously, they're all drawn by our 100 megawatt scheme of what we're trying to build towards. One thing that the war has brought to us is opportunity. If you look at what Warren Buffett always says, when everyone's selling, you buy.
Be greedy when everybody's fearful.
Yeah, exactly. Yeah. So, at the end of the day, we're sort of working on that philosophy. What it's given us at the moment, when we were out there, we were working with some small players. And what we have found is that you've got a lot of these small, they're 1.5, 2 megawatt, 3 megawatt, etc. sites where they can't build them, etc. But they are now looking at selling them. For us, it's about consolidating the industry and bringing lots of these smaller ones on. But more importantly, they've already got the infrastructure in place. So you've not got a big build out cost and big capex. So we can literally go in, buy them, turn the power on and put our modular straight on top of it. And off we go. Really, really simple.
Yeah, Very good. I was just looking at some of the numbers on that for the government there, and it looks like again, correct me if I'm wrong, that there's total consideration £2 million with an equity of 1 million in new shares issued above the premium to the recent share market price and their 30-day VWAP, with a deferred cash of 1 million. And then looking at the actual potential in terms of economics on it, it looks like roughly about $1.85 million of annual revenue with $850,000 of annual free cash flow, and a three-year payback once fully utilized. So quite a quick payback on that project there.
Yeah, well, this is what we're looking at, and we've got more in the pipeline that we're trying to build on at the moment. Exactly the same process, but more importantly as well, with that particular site, the first one that we've made the announcement on, because you've got the infrastructure there, you've also got behind it, you've got power going to that site in excess of what they've already got. So again, for a very small outlay, we can now increase that power on that one alone. We're trying to be modest on it, but from 3.5, we could easily go up to sort of anything between 8.5 and 12.5 megawatt without a big expense again, without putting down a lot of cash in the ground, which is the main thing. And then it's just simple again, us with our modular over the top, really, really simple, straightforward.
Very good. Paul, since we last spoke, you've had the deal with Saudi Arabia as well as the United Arab Emirates. So tell us a little bit more about how you see that unfolding.
Again, it's something that we're working on quite positively in the background. Firstly, with Saudi, we've got everything in place, logistically ready to go, paperwork and license-wise. They're very, very keen to work forward with us along the same lines of what we've got out in Abu Dhabi. Bahrain, again, they're really, really positive. They like our plan and what we've got. They've also got, interestingly, a lot of... another one of their departments is high net worth residents that they have, where they've got two things that we need: land and secondly, power to that. So for us, it's hopefully it's going to be a no-brainer to roll out there again. What we need to do is obviously just show what we've got as a proven concept with the cash flow coming in from our first two sites now, and then let's start moving forward with the other countries out there.
Very good. I mean, if all these things to come to fruition, even with what you've got on the cards at the minute, where are you likely to be in terms of revenues and stuff by the end of 2026?
Well, to put it into really quick layman's terms, we really, really want to look at within the next, say, 18 months, we can see us at 100 megawatts. And to put that into, raw numbers on the ground, if you said 1 megawatt will produce $250,000 in income per year, that's the real rudimentary numbers.
Okay, so $250,000 per megawatt per year.
Correct.
And you talk about 100 megawatts.
Correct.
So we're talking about $25 million US. Now, how much of that is cash flow?
That is the free cash flow, exactly what we said on the last.
Okay, so thanks for the interview. We look forward to it being worth about £250 million this time next year.
Let's hope so.
I'm being sarcastic slightly there, but ultimately, ultimately, this is where we're at, isn't it? I mean, we're in the middle of a war, obviously, and there are issues that have to be overcome. But the reality of the situation is, war or no war, this isn't going away.
No, I mean, at the end of the day, what you've got to look at as well, Kevin, is the fact that obviously the war, as much as how terrible it is and everything. Number one, we're finding that we're going to pick up these sites, and secondly, you've got a lot of people now. And Iran was one of the largest Bitcoin mining countries. They're now stopping that. They're diverting their power elsewhere. I think theirs has dropped by something like 4 or 5% in the last 4 weeks, their actual mining capacity. So it brings the hash rate down on what there is. And at the end of the day, there's more for everyone else. So whereas other people, where they're going to be fighting obviously with power costs, we're not. We're fixed. So we look at it as a positive on being able to scale up quicker.
The other conversation I had with you, Paul, and it wasn't really anything that we recorded, if I remember rightly, but you'd had lots of inbound stuff from other Gulf nations as well that were interested in the process. So have any of those moved on? I mean, as we stand, we've got the UAE and Saudi.
And the next one is Bahrain. They're the ones that we are in constant dialogue with at the moment. But again, for us, we need to just get the first ones up and running, and then we can try to we don't want to sort of run before we can walk.
Yeah, and from the point of view of when you did the UAE one, it was, I think, 8 megawatts, and then you were hoping that that was going to be extended to 20 megawatt plus. How is that likely to occur?
That's very good, but it's the same with all the ones we're looking at now, such as the 3.5 megawatt. You've always got it there. The infrastructure's there just to do it. Again, for us, what we're looking at is we've got other plates spinning with manufacturers of high performance computers, where we're looking at putting their goods, as it were, into our modules straight away, which gives us a different network and a different way of building quickly and fast. It's going to mean that we're not probably looking at lots and lots of different clients. It's something that we can talk about probably in another 4 weeks' time.
Okay, very good. But overall, other than the fact that we're dealing with what we're dealing with, what's your thoughts on the business?
I'm still really positive, so much so that because of what's happened out there, and from our last visit, we're able to pick up a lot of these small sites and consolidate the industry across the UAE. That is really something that I see as important. And also, it just means CapEx-wise, it's a lot less spend.
And these small sites, I mean, how many are we talking about that you think you have the possibility to pick up maybe in 26, 27?
Basically, within 26 alone, we're looking at probably 50, 60 megawatt without looking too far.
And they're basically plug and play, ready to go.
Correct, that's right. Literally switch on, put our module on top of it, we're off, we're going within weeks. We're not talking about months. So basically, as soon as we're signed up and all the due diligence is finished on the 3.5, we could literally be up and running within 6 weeks.
Very good. All sounds great. I mean, let's hope the whole thing settles down a bit, obviously, because that's going to help people's ability to look at this from a reasonable point of view. But I mean, if you look at active energy being worth currently less than £3 million, and you have the ability that one of these things is probably going to cover those costs, it becomes a bit bizarre, really.
One alone, you're completely right, Kevin. One of them alone, it will change it completely.
Okay, so on that note, we'll say Paul Elliott, CEO of Active Energy Group. Thanks very much for appearing on the podcast again.
Thank you, guys.
So let's move on to our next guest, Mark Creaser and Siam Kidd from Astrid Intelligence. Welcome back to the podcast, gents.
Thanks for having us.
Yeah, absolutely. So since your last on, Astrid has released a series of updates recently. The company reported strong growth in its position in SCORE, subnet 44, where an initial 1,000 tower deployment worth around $300,000 at the time has grown to roughly 3,180 tower, reflecting token price appreciation and additional emissions earned through network participation. Alongside this, Astrid has launched Astrid Vault, an on-chain platform designed to improve liquidity and stability across BitTensor subnets by encouraging longer-term token lockups. And finally, the company has taken another step toward becoming an infrastructure-led operator with the acquisition and launch of the Astrid Validator, allowing it to participate directly in network governance while earning protocol emissions. So if we start with the SCORE position, that original 1,000 TAU allocation has grown significantly through participation in the network. Can you explain how that compounding works within BitTensor and why SCORE stood out as a subnet you wanted exposure to?
With the subnet tokens, because they have, this is very hard to explain in simple terms. So if you look at Bitcoin, there's a maximum cap of 21 million tokens. There's a halving every 4 years, etc. And TAU is exactly the same. And when you look at the emissions curve of Bitcoin and also TAU, all like the lion's share of those tokens entering the world happens right at the front of the curve. So in the first 7 years, really. Now with a subnet token, it's exactly the same, 21 million subnet tokens at max cap, but the halving schedule is 2 years, so it's halved. So what this means is that in the first 2 years, or in the first 3 years of the subnet's existence, you have a lot of that subnet token being just spat out into the wilderness. And as a result of that, the APY for holding alpha, as in the subnet token early on, it all comes to those holders. Now, the APY for these subnets, they range really between 50 to 90% APY. But broad strokes, if you're being really pessimistic with the APY, over a 3-year period, let's just say for the next 18 months you have...
Siam, APY.
It's the annual percentage yield. So most people look at APR and that's a fixed rate, but because you receive your yield on a daily basis, or it's actually every 72 minutes. So when you're looking at the compounding effect, you have to do the maths on a daily compounding. And that's why you get so let's say the rough example I use is say 40% over the next 18 months and then 20% over the next 18 months. What actually happens is that you double the amount of subnet tokens that you own. And so then when you factor in the price of the subnet token in 3 years' time, obviously that's an unknown variable, you'll then massively amplify the amount of tau that you have. And then what is the price of tau in 3 years' time? Again, unknown variable. But when you're doing really pessimistic figures, like really pessimistic, you're basically looking at quadrupling your net asset value. So, if we're already, with the score position, for example, started at 1,000, now roughly 3, and that's not APY, that's just the price of score going well. We're looking to basically quadruple that position just by holding it over the next 3 years. And that's just one position out of many we've done.
Yeah. And just talk us through subnet 44, which I believe, is it focusing on real-time video intelligence or something along those lines?
Yeah, it's vision, effectively. So another way to look at BitTensor is imagining it's a brain. And you and I, we have very sophisticated brains. The fact that you know where your left foot is some sort of algorithm there. Well, a digital brain, no, it won't know where its feet are. So someone has to code that. Someone has to code how it sees. You need to be able to distinguish the difference between a bird or a car or a human. And like with Score, with their computer vision, it's very generalist, which is actually what you need. So they can use their vision product in everything. So one of their contracts was that they can basically feed in the CCTV camera from petrol forecourts, and then very quickly it will be able to tell if someone is about to drive off without paying. And there's many other things, like you could feed in CCTV footage of London, and then it will be able to predict bad actors, bad actions. So yeah, it's one subnet out of 128. Yeah, we're big fans of Score.
Yeah. And then let's just look at Astrid Vault. And one of the big challenges within these decentralized AI networks is obviously liquidity and short-term volatility. So how do you see Vault helping stabilize these subnet token markets as the ecosystem grows?
Yeah, so when you're a subnet owner or someone that's mining on a subnet, so you're helping build the product on a subnet, you get emitted a lot of subnet tokens. Now, just like being a company founder, the tokens you have are really, really illiquid. And so a lot of these validators, miners, and subnet owners, they end up with huge amounts of subnet tokens, but they can't touch it and they can't sell it, because the moment they sell it, everyone goes, oh, subnet owner is selling. Dump their subnet. Same in penny stocks or equities, really. So one of the things that Astrid Vault does is that they can deposit their alpha, as in whenever I say alpha, I mean subnet token. They can deposit their alpha into our vault, and there is a bit of a discount rate. So let's say they deposit $10,000 worth of subnet 1, and let's say there's a 10% discount rate. So what happens is that the protocol, not us, the BitTensor, will then emit that person $9,000 worth of Astrid 127 alpha. And that person can then do whatever they wish with that alpha. They can sell straight away to get liquid. But what happens is our vault becomes this sort of liquidity well, this black hole where it will be sucking up other subnet tokens at a discount, and then it will compound over time.
Very good. And then with the launch of Validator, you're moving from simply holding these digital assets to operating core infrastructure within the network. Just how important is that transition for Astrid as it builds a long-term operating business in decentralized AI?
Yeah, well, it's really important. Astrid is not an investment vehicle, it's an operating vehicle. And when you make investments in a space, you're hoping that the value of those investments goes up. When you invest in the infrastructure, you're actually able to profit whether it's going up or down. With a validator, there are a couple of interesting things. One is that all of our Astrid tau, all of our alpha, needs to be staked to a validator anyway. So somebody is profiting from our investment in this space. If we own our own validator, then we make that money. So we're spending that money on the validator, but we're also the validator ourselves, so we're recouping the cash. And as a big player with thousands of tau invested into BitTensor, it makes sense for us to be on both sides of that. So we're making the investment, but we're also making money. If we're a good quality validator, then we'll also make money on other people staking their alpha to our validator.
So now that we've basically confused everybody in terms of what this is all about, I'm going to take everybody 5 steps back and look at BitTensor and say, what the hell's this all about? Why would we even want to do this?
Yeah, so I don't know if I've explained the Google analogy before, but the way I always look at it is that imagine Alphabet is this big umbrella company, and below it has all sorts of mini companies and projects. And some of those companies you may have heard of, like YouTube, Google Maps, Google Drive, DeepMind. And if you thought that Google or Alphabet had a great future, you can buy their gross value capture mechanism at the top, which is their ticker, Goog. And so that's Google. BitTensor is exactly the same. It's a massive umbrella entity or protocol. At the moment, there's 128 independent AI startups, and the gross value capture mechanism at the top is the token tau, TAO. Now, you can either just buy tau and then just sit there passively and experience the ups and downs of BitTensor as a whole, or if you think that there is a subnet, so these independent AI startups are called subnets, you can actually swap your tau for subnet tokens and then effectively buy equity within these subnets. And like with any market, like if you look at the S&P 500, most non-performant, whereas it's the Mag 7 doing the heavy lifting. Every indice, every market is the same. So you'll have Pareto distribution everywhere, and that's basically BitTensor. So it's this big umbrella entity with the world's best distributed decentralized AI startups.
Okay, so you've got decentralized AI. So how is decentralized AI different from ChatGPT, Grok, etc., etc.?
Yeah, it's a bit like the internet and Bitcoin. So if you wanted to sue the internet, who would you sue? How would you shut the internet down, or how would you shut down, Bitcoin miners, those that are providing compute? So decentralized AI is akin to that in some ways. And I guess I have to explain everything in analogies, unfortunately. Like if you're not a fan of the fiat currency system and you're not a fan of the consolidated control and power of central banks, well, Bitcoin is your Noah's financial ark. Conversely, if you are not entirely enamored with pooling and centralized control of AI, whether it be big private entities or corporates or sovereign entities, then BitTensor is your AI Noah's Ark, so to speak. And when we look at the growth curves of centralized AI, so ChatGPT or Grok, all these, they're very impressive steep curves. But what no one is seeing is this decentralized AI, which is this vertical line that is coming out of nowhere. And at the moment, most of the decentralized AI isn't beating frontier labs, but the cadence is so that over the next couple of years, decentralized solutions will overtake. And the moment that happens, centralized entities just can't catch up.
Why?
It's the decentralized nature of it. So if you take Bitcoin, for example, it has one incentive mechanism. So Bitcoin was like, hey, we just want compute. If you have a GPU or a computer of some sort, hook it up to our network, we'll give you Bitcoin in exchange. So it's one incentive mechanism, and as a result, it became the world's biggest supercomputer by many orders of magnitude. And so if OpenAI wanted to, let's say, double its compute power right now, it would take years. They'd have to buy a big chunk of land somewhere. They'd have to build a big old factory and warehouses. Then they'd have to find the power generation and storage. And it's not as easy as that. That's the easy bit. The hardest bit is actually connecting the power to the chips. And that's if they can find the chips. So you're looking, I mean, Elon did it, or he's built Colossus 1 and 2 pretty damn fast over the last 3 years. But most companies would take 5 to 12 years. And so one of the reasons that distributed solutions are better is that you have all of this unused capacity, whether it's in compute, whether it's in data storage. For example, there's Subnet 75 Hippias. They do distributed cloud storage. So it's like Dropbox or Google Drive or AWS, but it's 10 times cheaper. So if you go to hippias.com and look at their pricing, and let's say you're an enterprise that needs 1,000 terabytes of storage with, say, 1,000 terabytes of egress. Let's say you're a video hosting company. Well, with Amazon or Google, it's going to cost you $100,000 to $150,000 per month. With Hippias, it's going to cost you $3,000 a month.
So will that be limited? Because obviously these AWS and the have invested huge amounts on the storage capacities and their ability to do that within the cloud, or is it basically that this company can just expand infinitely?
Yeah. So at the end of the day, you can't beat physics. So if you were to draw a chart of total unused storage, just total storage, full stop, on the planet, however many petaflops that may be, or petabytes. Let's say it's up here, and then you look at all the human use of data storage. It's going to be way down here, and so what distributed systems tend to do is it's a much more efficient resource allocation method. So what Hippias is doing is taking spare storage from devices all over the world, and then it's going, hey, we got all of the storage here, and you can use it for very cheap prices. And so the amount of storage around the world is way more than the amount of usage at the moment.
Let's not focus just on one thing, because we'll go down a rabbit hole otherwise. From the point of view then, the validator is a payment that you're going to be making, or that the whole situation was going to be making in BitTensor to someone who's going to validate what was happening in the subnet. You're now saying, well, we are that validator as well. Yes?
Yeah. So in every subnet, there's 7,200 alpha being emitted every single day. 18% goes to the subnet owners, 41% goes to the miners, 41% goes to the validators. So in a subnet is solving a challenge or a real world issue somewhere. So the miners are those that are submitting their answers to the test, so to speak, and the validators are the referees or the examiners, making sure the miners are doing their job and no one's cheating, etc. So validators, when you run a proper validator on a subnet, you're running code, you're checking the answers of these miners, and you get rewarded handsomely for it. So with all of the positions that we have, or all the subnets that enter our vault, we will be running real validation on all of those different subnets. So yes, it helps us grow our own subnet tokens at the best APY, but it also means that we get to try and fight for our chunk of that 41% that goes to validators.
Okay, so moving on then to the Astrid Arena, then tell us all about the Astrid Arena, what's happening there, and how's that going to affect the ability to get subnet tokens stroked out?
Yeah, I'm really quite excited about Astrid Arena. So when you spend a bit of time in BitTensor, you'll realize that subnets are able to find answers and solutions for things a lot cheaper and a lot faster than, let's say, a typical company. Because what you're doing is that you're saying, hey, here is a challenge world, come and solve it. And those are best at solving it. You get paid in our alpha. And so people work hard for that, and so Astrid Arena is basically a fighting ground for agents, so autonomous AI agents that can trade. And at the moment, the arena, we're getting these agents to trade Bitcoin, ETH, and Solana. Now, this is like the holy grail of trading. I've been trading for 22 years, and I've never, ever seen a trading bot that works and whatnot. But it's only now where we're getting really into text to action. We've seen with OpenClaw some amazing things. So what happens? So the goal here is that at some point, someone will introduce their agent, and it will win every competition. It will just win, win, win. And every single time that agent places a trade, it has to submit what's called an execution run, which is basically the reasoning and the logic of why it placed that trade. So we don't get people, people don't get to have a magic black box and then start winning every competition. Astrid is gleaning all of the intelligence from all of these agents. Now, I still think there's gold dust in even the bad agents as well, but eventually we'll have someone will have a very good, consistently profitable agent. We will see the reasoning behind that. We can then take that reasoning and put it into our own agents and test it out. And then eventually we'd like to run, put a fair chunk of money behind whatever this agent is, and then we can grow our own capital a lot faster because we can then start trading other markets. And it will be revenue in itself. But not just that. If we have this amazing agent that can trade, that's a valuable asset and product or service that we could sell to bigger entities as well. I mean, even myself, I'm no coder, but using these agents with Opus 4.6, I've created a really good subnet portfolio management tool. So I've got an OpenClaw literally sat next to me, and that trades. Well, it manages a portfolio, and it does a full analysis every 15 minutes, which is a lot faster than I can do. And so, yeah, text to action is opening up all sorts of avenues at the moment.
So the arena will create code or IP. Is that something that you can protect, or is something that you own, or is it something that effectively, because of this system, it will just eventually become useful, but then not useful as things change?
Yeah, so as a subnet owners, we can change the parameters, we can change the competitions. Let's say tomorrow an agent comes in that is amazing, and then is constantly nailing every competition. We can change things and turn the winners into a bit of a black box. So that way we can save the IP, so to speak. But there's all sorts of things you can do. Like there's another subnet called Ridges, where they're aiming to sort of battle and try and take out Claude code. So what they did is that in software engineering there's a thing called the SWE-bench 500, and they incentivized the world of software engineers to submit an agent that was really good at software engineering. And very quickly, in months, they went from like 0% to I think like 72% on the SWE-bench. And Claude Code does about 75%. And then they changed the parameters of their subnet, so and now they're productizing and going to market. So there's all sorts of things we can do, but the main mountain are the first Mount Everest is incentivizing people to submit their agents and to trade, which is happening right now.
And why would they come and trade? What is the benefit to them?
Because so these competitions last every week, and if your agent gets in first, second, or third, it gets rewarded in subnet 127 alpha. So these people, so you could create an OpenClaw right now, or Phil, and with your trading knowledge, you can configure it or give it strategies that you think it may do well with, and then if it wins, you get paid.
Okay, very good, very good. So I'm looking at the overall picture, and we've got 18,000 plus tau, which how much of that 18,000 tau has been broken down into subnet tokens?
All of it. Well, pretty much all of it. We had to use some of the tau to buy the validator and the bridge, so for Astrid Bridge, and then the rest all went into alpha, various subnet partnerships and whatnot.
So all of that now is currently working at this APY. So if you're a computing man, which I know you are, 12 months down the line, if you don't do anything, what happens? Assuming a tau is valued at $236 in 12 months' time.
Yeah, so let's do a real example. So let's just take an arbitrary number like 10,000 tau. Okay. So I've got my little calculator here.
This is where Siam shares his screen normally.
So 10,000 tau. Now let's say you put that into all sorts of different subnet tokens, and a good average price of a subnet token is 0.005. So divide that by 0.005. That means you end up with 2 million subnet tokens. And being really pessimistic, let's just say over the next 18 months, we get 40% APY for that. So you do 0.4 divided by 3.6 plus 1, and then to the power of 547, because that's how many days in 18 months, gives us a factor of 1.82 times 2 million. So in 18 months, the 2 million alpha turns into 3.64 million alpha. So if you just quickly remember that. And then we have, let's say, another 18 months of 20% APY, which again, these figures are very pessimistic for BitTensor. In 3 years' time, the 2 million alpha turns into 4.9 million alpha. And then we look at the price. So then the next thing you have to do is, well, what is the price of the average price going to be? So it's a shame I can't share some charts, but there's two very good charts, which is the percent of tau leaving the root network, which is, again, I don't want to go into the weeds, but long story short, we have this thing called sum of subnets, which is if you add all the prices of all the subnets, it gives you sum of subnets. And it's at 1.3 at the moment, but there's only 18% of all of the tau in the ecosystem in subnets. And this chart is just a straight line. It's a straight diagonal line up. And not only that, we have this rising water level because you have deregistration prices. So 3 months ago, the dereg price was about 0.001 tau. It's now about 0.003 tau and rising. So let's just say in 3 years' time, that average price is not 0.005, but say 0.01. We take that 4.91 million times by 0.01, and then all of a sudden, you've gone from 10,000 alpha to 49,117 alpha. So just under 50,000 alpha. So you've almost 5x the amount of tau that you've gone. And then what price of tau in 3 years' time?
So if tau is $1,000 in 3 years' time, which wouldn't be out of the equation, I don't think.
Yeah,
then you'd have $50 million.
Just $49.1 million. And you started at 10,000 tau, let's say $200 tau. So 2 million to 49 million. And those numbers are really pessimistic.
And that's if you don't do anything different than you're doing at the minute.
Well, that is if we just sit on our hands and twiddle our thumbs.
Yeah, which I presume you're not doing.
Is that possible? Can
Is that even possible?
Wait a minute. It's like the old rubbing the belly and patting the head. It's not possible.
Sitting on your hands and twiddling your thumbs at the same time might be a pleasant experience, actually. So be very careful.
Depends who you are, really.
Yeah, indeed. Mark, I'm going to ask you some practical questions, just because I know you've got to shoot as well. What has been happening? Obviously, the financial figures came out. They were a bit disturbing, to say the least, as in friends and family seem to have benefited a lot. Olivia has left the scenes. Would you like to comment? I mean, obviously, all this was party to you guys taking over, but how say you?
In the run-up to the accounts coming out, Siam and I were very, very keen to get those accounts out and draw a line underneath them, because when we came into Astrid, at the end of November, we recognised that the company had transformed itself and pivoted and done an awful lot, a lot of activity around inactivity for some time. A lot of work going on to not really produce anything. It's redirected itself, and it's ended up with appointing the two of us to create that direction and that strategy. And I'm delighted with that. We wanted to get the accounts out, so there was a line in the sand, and we knew what we were building on. I think it's fair to say that shareholders didn't really like everything that they saw in those accounts. I understand that, and I hope that what they can see now is that there's a couple of guys here that are really passionate about what we're doing and really passionate about growing Astrid. Olivia has done a good job of pivoting and repivoting the business in her time as chairperson, and she's decided to take the opportunity to leave us in charge of Astrid and in charge of the direction and implementing that new strategy, and take her time to focus on other projects. And that's an exciting opportunity for us, because that creates more space for us to take responsibility to drive Astrid forwards.
Okay, so Sam, tell me what happens next. How do you turn this into a company that is going to be worth significantly more than it currently is? And then I'll ask you the same question, Mark.
Yeah, I feel this is a bit of not like a cheat code, but and I hate to say this, even if we don't do much, Astrid will do very, very well based on the starting capital and the starting activity we've already done. So obviously we're going to be driving forward with Arena. That will be great. We have Bridge that we're hooking up to Hyperliquid. So there's, the bridge is like the toll road. And when the bull market kicks in, that's when all these toll roads are used more. And so we're making revenue with that. But the other thing is that imagine having an Astrid type business, but focus on Bitcoin back in 2012. This is basically what Astrid is, but for BitTensor. But now we have the beautiful hindsight that BitTensor has given us. Not only do we have Barry Silbert, the guy that really boomed Bitcoin from 2012 onwards, Barry Silbert's all in on BitTensor now with his new Yuma company. And because the tokenomics of Bitcoin and BitTensor are identical, there's some interesting comparisons. So if you look, it took roughly 12 years for Bitcoin to go from zero or price discovery to a trillion dollar market cap. A trillion. So roughly 12 years. Well, by the time of Bitcoin's first halving, its market cap was only $130 million. By the time of BitTensor's first halving, it was about $2.8 billion, not million. So we're already, trouncing Bitcoin in that comparison. And then when I cast my mind forwards 5 or so years, I think, okay, well, in almost every metric, BitTensor is beating Bitcoin in so many different things. Like Bitcoin took 10 to 12 years to get strategic Bitcoin reserve companies and DATs. It took BitTensor 2 or 3 years to do that. And by the way, this is because Bitcoin has been the big ice carver. It's been the big ship that's making everything easy for everyone behind it. We're now in a crypto-friendly world, or getting friendlier. Pretty much the head of the FTC, the CFTC, the SEC, the Fed, all of the Trump administration, they're pro-crypto. So, and we're in the biggest industry boom in history, which is AI. So if Bitcoin gets $1 trillion market cap in 12 years, I strongly believe BitTensor does that in less than 12 years. So even if we're looking at, and here's the thing, even if it's in 12 years time, or if BitTensor does it, 8 years plus from launch, that we're looking at $60,000 TAU. So the difference is very small, because it's really, you just divide $1 trillion market cap by the circulating supply of TAU. So whether that's 17 million or 16 million or 14 million, you're looking around the $60,000 TAU level. So that's where people sort of spit their coffee out and go, that's preposterous. I'm personally pissed off if we don't hit $10,000 TAU in a relatively short period of time.
Well, Astrid's going places. BitTensor is going places, and I haven't said a lot on this interview, and that's because the advantage that Astrid has is Siam. Siam has got this huge knowledge of BitTensor, and there are lots of people that have got the technical knowledge of BitTensor and understand how it works at a much greater level than I have. What Siam has got is he's got all of that knowledge, but also the business and the commercial knowledge of understanding what's going to make those businesses work in the real world. There are literally a handful of people in the world who have got those two understandings, understanding of business and understanding of how BitTensor is going to fit into that. There are not very many people that have got open claw AI bots. There are not very many people that are throwing agents into battle with other agents to trade. When you've got some of that understanding, then you're able to really leverage that understanding in this really, really exciting ecosystem. And we sit right in the middle of that in Astrid. We have got relationships that Siam and I have built up over the last 13 or 14 months of being inside BitTensor. We've got that commercial knowledge of being able to not exactly forecast, but have a really good idea of which teams are going to make it and which teams aren't. And we've got a decent pile of capital to start creating some investments in BitTensor, We did that RNS on score. That is, not our only investment. So we are really, really excited to get up every single day and work out how we're going to turn Astrid into something that people are proud to be part of.
So
Sounds good. Sounds like there's real potential for growth there.
So if those things happen, how quickly, or for those things to happen, how quickly do the subnets actually have to grow their APYs?
no, the APY is algorithmic. It's all based on their emissions schedule. So if you have a brand new subnet, the APY is going to be north of 100%, and it decays over time. So every subnet has a halving every 2 years, and then the APY halves. So to be honest, we only need one breakout subnet. Really, we just need one subnet that has a product or a service. It comes out there, it shocks the world, has its chat GPT moment or DeepSeek moment, and everyone goes, oh wow, and that gets eyeballs and purchase and money coming into BitTensor, buying town, buying subnets, etc. And what we have is this fascinating mechanism here where when you look at subnet, the main sell side pressure are the miners, because the miners are these data scientists all over the world, helping solve a problem. They get issued the alpha, but they have to pay costs. They have to pay their bills, so they sell it on the market. But there's this experiment which no one, I think there's one subnet that's very close, where when a subnet makes enough real world revenue that they can do tau purchases and then alpha buybacks, and those alpha buybacks are more than the miner dumpage, then technically the price of that alpha will only go up. And so Subnet 93 Bitcast, which is like a decentralized video agency or video distribution network, I think they announced the other day that they are the first subnet that is fully counteracting miner sell side from real world revenue.
So therefore, there's only one way it can go, because there's a limited supply and demand.
Exactly. And so I'm a big person. Like, I'm constantly saying, look, subnets, you need to focus on real world revenue. Get your product out there, get money, and it benefits everyone.
Wow. Every day is a school day, as they say, Siam. I think on that note, we'll say Mark Creaser and Siam Kidd from Astrid Intelligence, thanks very much for appearing on the podcast.
Thanks for having us.
So let's have a look at some of the movers and shakers of the week. The best performer I see is 88 Energy, 88E is the ticker, up some 76%. I guess obviously on the back of a sharp rise in oil prices, 88 completed its small holding sale facility with 46.1 million shares sold on behalf of 6,049 shareholders holding parcels worth less than $500. Proceeds will be distributed pro rata around the 20th of March, while that reduction in small shareholders is expected to lower the company's administrative costs going forward. So good news for them. Zenith Energy up 38%. We saw a couple of RNSs in the week. The big one was the news that the company were asking the Swiss Federal Supreme Court to cancel a previous arbitration ruling in favour of Tunisia after the company's subsidiary lost a $130 million claim related to the SLK oil concession. Zenith argues the arbitration process was flawed due to procedural irregularities and undisclosed conflicts of interest, while Tunisia has missed the deadline to respond and instead challenge the Swiss court's authority. Charles, in your experience, these annulments of arbitrations, how the awarding, is it rare? From my sort of limited research, I saw between 5% to 10% of cases succeeding.
Yeah, I mean, generally you don't succeed, but then you've got to bear in mind that a lot of the time when you take a case to annulment, you're basically trying to get the state to pay pennies on the dollar, right? So just go away and here's a few million and cover the legal costs. But in this case, Zenith actually has a really good legal case. And basically, the reason why the legal case is so good is because Tunisia is just completely refusing to respect the rule of international law. And every single step along the way, they've decided to be as difficult and as pig-headed as possible. And this is no different. The Republic of Tunisia failing to submit its response to the annulment application is just the latest in the step of things. In this steps, it's done wrong, where it's just basically not respecting the way the court system works. And the arbitration systems it as a state has signed up to, and contesting the Swiss court's ability to actually hear the annulment application is just ridiculous. The Swiss court has authority. That's it. There's no argument there. In my mind, obviously, that's not investment advice at all or legal advice, But I can't even sure what grounds they could contest it on, if that makes sense. So we shall see. But it's just another legally unfounded and unreasonable argument, as they say in the RNS. So I'd agree with that. And I think possibly what Tunisia is trying to do is just drain Zenith of resources and energy, ironically, until they give up. But Zenith isn't going to. So they might want to wake up to that fact sooner rather than later. We shall see.
Yeah. And then they also announced, didn't they, on Friday, that another acquisition, I believe, of 28 megawatt solar development projects. Seems like there's quite a few of these acquisitions of late. There was one on, as I say, on Friday, and then there was also one on the previous Thursday. They talked about the solar acquisition and also gas supply growth there as they kind of like objective of achieving a solar energy development portfolio exceeding the 200 megawatts by the close of 2026. So what do you make of that whole kind of these acquisitions they're doing?
Well, I think the energy security angle is easy to understand, right? It's particularly in light of Hormuz and what's going on in the world generally. I think possibly the interesting thing about it is that it's been kind of like GreenX with their copper and their legal arbitration against Poland, is that the legal cases just take so much precedence over anything else that's going on with regards to things like solar, that it's hot, like the solar isn't being valued at all. Kind of like the uranium and Zenith also not being valued at all. And one does wonder whether Zenith would be better off spinning off the solar or spinning off the uranium separately to get better valuations of those assets, which, if they weren't being affected by the legal rulings, the cases and the market's positioning on them, would probably be valued higher as independent assets. But we shall see.
Yeah, I think the value of Zenith now, if you took out the arbitration, I think that the solar and the uranium is probably the market cap at least, and probably more. So I think you're getting a free hit. It depends which way you want to look at it. You're getting a free hit on the solar and the uranium, or you're getting a free hit on the legal situation. So, but one or the other is effectively not accounted for in this share price as we speak.
And I think the other thing with, just before we move on, is that it's not just it's multiple legal cases as well. So you might, hopefully they'll all get one, but you might lose, some of them and win one. And even if you win one of the smaller ones, that's still material to the market cap that it currently sports. So yeah, another thing worth bearing in mind.
Yeah. Okay, Prospects Energy up 30%. They obviously installed new CEO, took up his post, I believe, in February, Tom Reynolds, and obviously the production has restarted at Romeral. So things moving nicely there. It'd be good to get them back on at some point, wouldn't it? And talk to the new CEO, Tom.
Yeah, I think it'd be great to have them on. I think it'd be great to that company. Just honestly, it's funny. It just needs a little bit of marketing. More than anything else, people need to hear the story, particularly in light of the energy security. Again, the same kind of story. A lot of stocks are up based on this, but you can't rely now on oil and gas out of Russia, out of the Middle East. If you're Europe, you want to build your own nuclear, your own solar, your own wind, and obviously a lot of companies we follow and track have done really well out of the geopolitical developments, and Prospects is doing the same. And if they execute, will do very well over the next few months.
Sure.
Yeah, come on.
Okay, let's have a look at some of the RNSs then. The biggest shake of the week was VID. VID is the ticker, Videndum, down some 65% after it agreed a comprehensive refinancing, including an 85 million equity raise, a 23 million debt for equity swap, and a 15.8 million debt write-off, reducing pro forma net debt from 111 million to 31. The deal strengthens the balance sheet, leaves around 60 million of debt facilities, and positions the group for growth, targeting revenues above 350 million with mid-teen EBITDA margins, with completion expected around the 30th of March. We talked a little bit last week, didn't we, Charles, about Surface Transforms, and unfortunately the news came this week that they had filed a notice of intention to appoint administrators following the loss of the major General Motors contract, which led the company to appoint Alvarez and Marshall as restructuring advisors and began cost-cutting measures, including potential redundancies. As a result, the company has requested the suspension of its shares from trading on AIM from 12.35 on the 12th of March while it assesses its financial position. So very sad news. I mean, as someone who has used their products in the past, track day, carbon ceramic brake discs, the company was probably I think it was one of two in the world that actually was the producer of these carbon ceramic brake discs. It's a shock, and I'd be interested to see what they do with the IP, because I mean there's so much demand for track day brake discs. So for me, really sad to see that. Obviously, also for the redundancies and the staff and the company, yeah, terrible news.
Yeah, it is terrible news. I think relying on that one, major partner, it was a mistake. But then also, I think the problem is, I say that sitting here, at times I've done that working as my freelance career, and I think most people do at some point if you work for yourself. One client that is able to pay very big bills for you is great, but then that's a risk you take. Growth companies, if you're an investor, you're hoping for growth, but sometimes it doesn't go right. I think that's the risk that you take. But then I feel kind of bad for the workers, but also the management and the founders who, by all accounts, they put a lot of effort in and they did the best they could. But if your major partner walks away, there's not much you can do about it other than potentially, as I say, they're going after they're planning to appoint administrators. But I still don't quite understand how the partner they had could walk away with less than a month of notice.
No, we talked about this last week, didn't we? It seems like they breached the contract.
Well, potentially, but you don't know terms. Well, actually, you do know it was RNS the terms of the contract, so it looks like there was a breach. So there must be, further information that's not public that we don't know and may never know. But I'm just sorry for investors. What I have to say.
Yeah, not good. Not good. And if we put that focus on your portfolio planning, I mean, we've had this before millions of times. How many people hold either all or 50% or more than 30% in one stock? It's like things can
I think
happen.
there are people, Kev, out there who have I call one stock wonders. The amount of people I speak to on Telegram who are all in on one stock, and you can't do that.
No, well, I think that the interesting thing as well is that there's a lot of people who do that, and then it's kind of like gambling, right? Like you do invest all your money into one stock, and then it wins, and you've won, and then you take your winnings and put it all into one stock again.
Yeah.
And it's kind of like betting, going to the roulette wheel, and you've done your
black
research.
Or red, isn't it?
Black or red.
Yeah,
and you can win, once or twice or three times, but if you keep doubling up, your 400 grand is going to become zero very quickly.
I've had this comment said to me a couple of times, and I've said it a couple of times in the last few weeks. I think in all of these things, we need to experience that we need to leave something on the table for the next man. It's almost like we want to squeeze the last sort of ounce out of whatever the situation is, when actually, if we've made 10 or 15 times our money, then that's a tremendous return. In any walk of life, in any situation. If you double, treble, quadruple your funds, then you have had a marvelous result.
Yeah. Well, I feel like maybe we're hammering the horse now, but if you look at the roast picks from last year, the return was very positive, right? I can't remember the figure off the top of my head. Kevin,
it was about 100%, but I mean, if you currently if you'd held them till now, the 2025 picks that we had, you'd be 156%.
It's not too shabby. However, of that 156%, which is insane, by the way, and hard to replicate, we don't want specific company names, but how a few of them, if you've only been in one or two of them, the worst performers, you would have been down significantly, right?
So, six of them you would have more than doubled your money.
Yeah, and
two of them you would have lost either 70% or 83% of your money.
Right. So if you pick the 83%. Then you'd be on to a hiding. But there's this portfolio diversification and risk management 101. So there you go.
Okay, so just a few little standout RNSs of the week. Not going to dwell too much on them, but just go through them. Obviously, AJAX, the Pereira Value acquisition, and Appian investment. There was an update on that in the week. Bazant Resources, NLZM mining license renewed, which was good news. There was also Kendrick had some news on update on the Bonya rare earth project as well. There was Tech Minerals Recyclers crowdfunding campaign with Crowdcube as well. Any sort of comments on there? Does anyone want to raise anything on those, or just
great news for AJAX? To be honest, I don't know why the share price went down. I think people are playing silly games on that one, but it's getting a stronger and stronger story every time another announcement is made. So to me, AJAX is going to be one for the future. I think we're going to look back on that, and that's going to be a GMET type story, just because of the way it's set up and the share price. Not the share price, the way the shares are held. I think it's going to get tighter and tighter and tighter and should do very well. The other one I'd like to talk about also was Fulcrum Metals. That's done pretty well, even though the share price hasn't gone amazingly well, but we're up to nearly 13p now in Fulcrum, so that's done pretty well. Critical Mineral Resources also was up after Charles wrote an article, and also Arkle after they were on the show last week. They've done pretty well, so yeah. All good.
Solvonis also had an update on the SVN 114 selected as lead candidate for the PTSD discovery program as well in the middle of the week. A little bit of a tick up there, but it does feel like that stock has sort of dropped back a little bit over the last 2 or 3 months.
Yeah, it's honest. I mean, it's interesting for me because I think on a risk reward basis, based on where they are with phase 3 clinical trials for their flagship, it should be significantly higher. I think though, I mean, I'd argue there's two things. Even potentially there's a seller in there that's slowly being worked out. But the other thing is that even though the fundamental story is great, there isn't going to be masses of news flow until you get the big one, you know? So it's lots of stocks, you get a nice every week and it's exciting. There's loads to talk about. Ones like this, you just need to stay in and just wait for the fireworks. And sometimes that takes time. But then when it does come, hopefully it'll be a big re-rate. But we shall see.
Yeah, I spoke to Anthony during the week, actually, just trying to arrange some PR. So hopefully we're going to be interviewing him towards the end of the month, the start of April.
Good. Okay, and something a little bit more positive to end the show on. I don't know if you saw the news this week, but France 24 ran the article where they talked about Japan approving stem cell treatment for Parkinson's in a world first. So this groundbreaking stem cell treatments for Parkinson's and severe heart failure as well. One of the manufacturers and media reports said that Friday, with the therapies expected to reach patients within months. So it looks like it's going to be accelerated pretty quickly. It was from pharmaceutical company Sumitomo Pharma, and it had received the green light for the manufacture and sale of Amphefery. It's Parkinson's disease treatment that transplants stem cells into a patient's brain. Now, as someone who's had first-hand experience of this through my mother, who's unfortunately was diagnosed with Parkinson's about 15 years ago, and has seen just the devastating effects. This is a really positive news story to come out.
Yeah, it's really super positive. Obviously, it is early stage, and it's the study only involves 7 Parkinson's patients. But it's do you remember it was last year when the first sort of successful treatment for Huntington's disease came out, right?
Yeah.
And I get the sense, whether it's not hitting the media, the news headlines right now, that it's artificial intelligence is making the difference in these clinical breakthroughs that we potentially never could have made in the past. Not to take anything away from the scientists, but it seems to be now that finally we're able to make progress in these diseases, and it's just wonderful. There's a lot of darkness in the world. To remember, there are also people working tirelessly day and night to do good as well. It's just lovely to see.
Great news. Okay, on that note, we'll say thanks for listening. If you do like what you've heard, please subscribe, hit the bell icon for further notifications of future episodes, and have a great weekend all.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.